With so many different opinions in the media at the moment, it's hard to know if the Australian market is going to crash or boom in the next 2 years, which is why in this video, we wanted to bring you some of the positives and negatives associated with the current market so you can make a more educated decision as you continue to move forward or sit and see what happens next. You see, nobody has a crystal ball, especially us. So what we've tried to do in this video is aggregate some of the data, look at some of the biggest and smaller analysts in the market, and then collected their different ideas. Let's get the veggies over and done with first.
Yeah, well, let's hook into the Brussels sprouts first and foremost and talk about the high inflation that we've been experiencing globally at the moment. Fortunately, in Australia, it hasn't been as bad as other countries around the world. For example, Argentina's inflation was over 100% over the last 12 months, where Australia's up about 7.8% in the calendar year 2022.
On top of that, we've seen the most aggressive interest rates hike in Australian history. Not that long ago in 2022, we're starting off with a 0.1% interest rate. Now we're at 3.6% with it potentially going up again in the next month or so. So bit going on.
And with that, a lot of people still have their mortgages on those low fixed rates that are going to be expiring and moving to a higher variable interest rate. So it's going to really pinch the back pocket for a lot of people that are coming onto those higher interest rates over the next couple of months.
On top of that, we've seen the stock markets, crypto markets, bond markets, commodity markets go through all sorts of turmoil. Literally pretty much since the start of COVID, it's just been like a tornado.
Let's not forget real estate as well, because Australian property prices have had the biggest collapse in a single year in history as well. You know, property values in some areas of Sydney, Melbourne and inner city Brisbane have really fallen off as well. So those people that bought properties in May or June of 2022 in those Sydney and Melbourne markets, they're obviously feeling that influence of negative equity at the moment, which is really hard. The last negative thing is just the sentiment. Sentiment has been at the lowest level since a global financial crisis. So people are feeling it at the moment, and completely understandable after looking at some of these negatives there. You know, higher cost of living, higher interest rates, you know, huge inflation recently. So people aren't feeling as positive and optimistic about the future as they have in the past. But fortunately, we are starting to see a little bit of a turnaround in that sentiment data.
You know, I think there's two things to that. Like last year when this all started, the banks were sort of not understanding how far it was going to go, and neither was the Australian government. I think they were saying maybe 4%. And then the last 6 months, they've sort of suggested that it was going to land at about 6%. So there's two things that people have been able to do with that information: completely sit on the sidelines, which is the safest position for many people, or to stomach a 6% interest rate and move into the market.
You know, I guess a positive associated with real estate there is the fact that, you know, the last thing that people want to do is sell their home. So most people have got to figure out a way to increase their income or generate a little bit more income so that they can withstand those higher interest rates. And I guess now we can move on to the steak and potatoes and start talking about some of the positive things out there, because we don't like to just sound pessimistic. Yes, there's some negatives, but on the flip side of that coin, there's so many amazing things occurring in the Australian economy at the moment.
You know, I think the big thing that the media is not reporting on too much at the moment is, according to CoreLogic and actually our own experience buying in the market every week, the rate of decline has sort of come to a halt. Sydney in particular has started to go up again, as has the bottom end of the Brisbane market, and the rate of decline is definitely settling down. Now, that could go one of three ways. We could see further declines, we could see a flatlining, or we could see, like in COVID, after the GFC, actually prices being reset and starting to run a little bit again as well.
Now, looking at some of the predictions from Simon Pressley, he believes that most locations around Australia, most capital cities and most regional markets will see some capital gains this year, albeit in the single digits, somewhere between about 2% and 7%. And this is heavily due to the supply and demand. Right now, the supply levels are sitting at very low levels, about almost 20% below the 5-year average. So 1 in 5 properties that is usually on the market is not available at the moment. And we've got a huge amount of demand coming into Australia, with the vacancy rate sitting at 1% nationally at the moment, sitting below 1% in Brisbane, in Perth, in Adelaide, in Hobart. We're seeing rents increase there. And with the overseas immigration occurring at the moment, there's currently 32,000 available rental dwellings in Australia, and there's expected to be over 700,000 new people move to the country this year. That's just fucking insane.
insane. 200,000 people is what the ABS is saying in terms of long-term migrants coming to Australia on long-term visas. And then we've got, 500,000 students coming back, particularly into Sydney, Melbourne and Brisbane to take over that inner city unit market again that's been banged up a bit since the start of COVID.
One of the other positive things that I read was just absolutely mind-blowing, and it was from Property Share Market Economics, where they looked at 70 years worth of data where they saw 11 interest rate rising cycles, and 10 of those 11 cycles we saw property prices increase. So based on that data that they've put together, there wasn't a huge correlation between those interest rates rising and property prices declining. So it's not always the case that things are going to be a bit turbulent when those interest rates are rising.
Between 2002 and I think 2008, interest rates in Australia went up more than 20 times, and 6 of Australia's 8 capital cities doubled in value. In fact, Brisbane did 120% during that period of time. So I think it's important to understand what's going on at the moment, but collect different ideas. And then in reality, investing in property should never be a short-term decision. It should never be a 1-year or a 5-year investment. If we look at the bigger picture, in John Lindeman's book, Mastering the Australian Housing Market, we've seen house prices go up by an average of 11% per annum for the last 100 years when you average out the data. If we look at an example by Homely, in Sydney, Melbourne and Brisbane in almost the last 50 years, we've seen house prices go up when you get the total data divided by that number of years by more than 9.5%. And then I think you saw something recently from CoreLogic as well.
Yeah, so over the last 30 years, what this actually indicated was that property prices, houses in the major metro markets in Australia on average have gone up 453%. So you divide that by 30 years, it's over 15% per year. Now, obviously, winners and losers in there, but that's just an amazing return on investment. So developing a long-term belief system, developing a long-term strategy, and not try to pick the eyes out of these short-term fluctuations is important, because even though John Lindeman indicated 11% per year, Homely's indicated 9.5%, and CoreLogic over 15%, it hasn't been consistent. It's been up, down, sideways, down, up, sideways, down, and that's what the future will hold as well. So you just have to have a thick skin as a property investor and look at the data.
So regardless of where you're at as an investor, our job is to collect different ideas and then see how that aligns with our strategy, our risk profile, where the market's at the moment, and then make the best decision on our journey as investors to financial freedom in the future.
Woo, that's a wrap.
That's a wrap.
That's cool, bro. Yeah. Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.